Right. So coming to the next case study, again from the chapter number 6 as to the study material, completion and review. C and Amit, a partner in J and Associates, is carrying out the stat audit of XYZ Gears for 23 and is in the process of issuing an audit report. His article training Manpreet is very curious about knowing the various facts relating to the consideration of standards on auditing while carrying out an audit and issuing the report. She asked Amit about the relevance of the going concern assumption in their audit and further reporting, to which, yes, Rafi and Amit explains to her that both parties have got their own responsibilities with respect to this accounting assumption. The management of the company has its own set of responsibilities while reporting upon the same. Is a very strict and sensitive, yes, reporting on the same is a very strict and sensitive matter for the auditor as per the requirement of the relevant SA. He tells Manpreet to prepare a list of procedures as she thinks that an auditor should carry out when he identifies that the company is facing a downfall in the business never seen before due to newer technology in the market and other competitors having sprung up, swiftly adopting the new technology. He finds that this condition may cast significant doubt on the company's ability to continue as a going concern. Manpreet thinks and researches and hands over a list of audit procedures to Namit for a final discussion. C and Amit clarifies accordingly. C and Amit concludes that the use of the going concern basis of accounting is appropriate, but a material uncertainty exists as to the future prospects of the current business. However, the management has made the appropriate disclosure with respect to such material uncertainty in the financial statements, so unmodified with the material uncertainty related to going concern para. Manpreet's list of procedures include the following: requesting management to make the assessment relating to the company's ability to continue as a going concern, evaluating management plan of future actions, making a specific assessment of the company's ability to continue as a going concern, analyzing the cash flow forecast of the company, considering the additional facts or information beyond the date of the management's assessment, making appropriate disclosures in the financial statements in connection with going concern, requesting written representation from the management regarding their future plans and the feasibility of the plans, and writing a para addressed to the stakeholders in the audit report, citing the results of the procedure adhered relating to the going concern assumption. Next, so an entire case study relating to the SA 570, which is regarding the going concern, one of the top favorite standard of the ICAI. I think almost in every exam we see some or the other question in the exam regarding the 570, which is going concern. Namit tells Manpreet about the auditor's responsibility in the above case of the matter under discussion. Which of the following does not fall under the auditor's responsibility? Obtain sufficient appropriate evidence on the matter under discussion? Yes. Conclude on the appropriateness of the management's use of going concern assumption? Yes. Assessing whether there is a material uncertainty exists about the company's ability to continue as a going concern? Okay. And guarantee the company's ability to continue as a going concern based on its procedures? No, there is no guarantee as to the future viability of the business or the efficiency or effectiveness of the management. Identify which set of the audit procedures are relevant in the above case scenario as per the list prepared by Manpreet. Right, so we look into the list over there. What is procedure number one? Requesting management. So if management has not yet done the assessment, now you request the management to do the assessment. And then do we inquire regarding management plan? Yes. Right, so do we want the options which have one over there? Yes, we want the one which has one over there. Right, so obviously C gets out. Right, so then after that, what are the other points we have over there? Right, so one. Then after that, the second one, evaluating management's plan for future action. So we ask management, what is your future plan? Making a specific assessment of the company's ability to continue as a going concern. We as such don't in a additional procedures mention about the specific assessment of the company's ability to continue as a going concern. That is why wherever 3 is there, we don't like that option. So straight away we can conclude with A. Right, and let us read what is the 4, 5 and the 7 over there. Right, so 4, analyze the cash flow forecast of the company, additional facts or information, and requesting the representation from the management. Right, so 1, we request management if they've not yet performed the assessment and management plan for future action. Then we also look into the cash flow forecast of the company. We also check for the Yes, the appropriate disclosures, and yes, analyze the cash flow, additional facts or information, and requesting the representations from the management, right? So we have 1, 2, then after that the 4, 5, and then after that the 7. Right, so 1, 2, 4, 5, and the 7. So 1, 2, 4, 5, and the 7. Right, so basically these are the additional audit procedures when there is a significant doubt regarding the entity's ability to continue as a going concern. These are the additional audit procedures when there is a significant doubt regarding the entity's ability to continue as a going concern. See, Namit concludes in the above case, which will lead him to find which type of audit opinion from the following: modified, unmodified, a separate section on the MUGC, right? So modified opinion, no. So wherever there is one, we don't want that. Now unmodified with MUGC. So we want the combination of 2 and 3. Right, then consider the following statements. Management is under a responsibility to make the specific assessment of the company's ability to continue as a going concern. So first it is management's responsibility, and management responsibility to make the appropriate disclosures in connection with the going concern in the financial statements. Yes, even that is management's responsibility. So both the statements are correct. Okay. Which of the following is most appropriate regarding going concern assumption? It signifies that the company is reflecting net losses. It signifies that the company is not modernizing its plant and machinery. It signifies that the company has no intention of curtailing materially in the foreseeable future, and it signifies that the assets are likely to be recorded at a price is likely to be recorded at the price they would fetch. No, it means that the company is having a foreseeable future. It's not going to shut down. It's not going to shut doors within 1 year from the balance sheet date, right? So that is, it has a foreseeable future. Right, so that's an entire case study relating to the SA 570 going concern.